Toast. Ladies and gentlemen of the crypto space, we're live at 11:32. No, I'm late. This is unacceptable. I'm not tardy. It's December 17th, almost towards the end of the month. There's no time for tardiness. Christmas time. Step it up, Noah. Today's topic is Bitcoin go up. I am one for horrible English this morning and incomplete sentences. How high will it go? And frankly, it's the stratosphere at this point. And that's what we're going to talk about today, that we talk about every day, but we're going to try and understand a bit of what's going on from a relative perspective. Maybe Bitcoin isn't going up. Maybe everything else is going down. Oh. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial or DeFi or nothing. Oh, Blockman and StakeNet, you guys are gonna come out of the you guys are gonna just take it over in a couple of years. I just got a feeling about that. Ooh, let's pop it over to the main screen and see who's in the stream. Captain Weber's in the house. Appreciate it. Hit that thumbs up. My man was awake at 4:35. How am I supposed to sleep? I woke up at 2:30 in the morning. I click refresh in the Delta app, and I'm like, whoa! Last night I was like, it's gonna hit like 2250 because that was at the top of its rising wedge, and then lo and behold, I wake up and just none chart patterns are useless. It's completely. Oh, maybe is that really an aberration? Get the heck out! That's crazy. All right, fine. Maybe chart patterns aren't useless. So what did we have? I mean, this is basically yesterday's move, and it turned out it's definitely not a wedge. This is more like a channel. That's crazy. I mean, there is a little bit of compression you could see, but it's just going up, boys and girls, and this resistance is definitely being supported. So as you can see here, this was an aberration. 2380. Oh my God. 23,800. Crazy. Oh my God, that's where it is right now, 2380. But this spike back here to 2380 was obviously a trend aberration, which is a deviation from what appeared to be normal, and it fell back in. But the fact that I don't even have words at this point. This is an absolutely breathtaking chart. You do not see this. This people don't see this. This doesn't happen, but it's happening. So what does it mean? Who else is in the stream? Big Bon's in the house. Curve 5. What's the difference between a normal deposit and a deposit and stake? So a deposit, you just get the LP, liquidity provider rewards, which are transaction fees. But the stake, you can get the boost. So here, check it out. So when you a normal deposit, you get the 3.54% on the compound pool, which is about 5% on average if you go over to the stats page. But when you stake and you boost, which means you lock curve for VE curve according to the boost requirement, you can get 12.94 to 32.36% yield denominated CRV in addition to the pool's the transaction fees. So that's what the stake is. So you know. Um, I have a large position in Curve for transparency's sake. We've talked about this a lot. I've gone into great detail. Bear in mind, I don't have a recommendation for folks. No doubt, as I have to say, I'm not a financial advisor, but smaller positions are not necessarily going to produce extravagant returns. Even at my level of my size of position, it's not large returns. I put $32,834 into this thing so far, and I get $7.82 a day, and I'm obviously getting 32% yield denominated in CRV from the compound pool, which I use the APE tax to produce YVECRV, which gives me leveraged admin fees of 1.484x. So I'm recycling my CRV emissions and vesting emissions into this to capture more of the admin fee, and it's not huge numbers. It's like $10 a day probably. Now the hope is, and this is where investing is speculative, the hope is that it's not $10 a day. The hope is that it's $1,000 a day in the coming years, as Curve may potentially be speculative, be uh, uh, you know uh, an infrastructure component of the crypto financial system. So this is a speculative play. So that's what I want to remind everyone. Uh, I break things down, risk off and risk on. I talk to you guys a lot about this, and Bitcoin is obviously the risk off of the crypto space, and this is quite risk on. Further transparency, folks know some of the numbers I play around with. This 32 and change is not not a double-digit percent of the portfolio. And bear in mind, the fun thing is at the beginning of the year, this was probably 20% of the portfolio, 30% of the portfolio, and now it's like 4 or 5%. That's just how much insanity has gone on this year. And the most exciting thing is really that tweet that I just put up on Twitter. The rich don't sell their assets, so the rich don't experience capital gains tax. Let me say that again, boys. The rich don't pay tax on their capital gains because they're not experiencing capital gains. The rich do not liquidate their assets. Mashinsky encourages it on Celsius anytime you try and withdraw. He encourages taking a loan. Don't sell your crypto, particularly Bitcoin. You want to accumulate Bitcoin because it is the pristine collateral asset, as talked about by Raul. And you use it to lend, so you generate revenue, and that revenue is income, and that you pay tax on and you spend. And you could also uh, use it to collateralize debt positions, so you could and that's where curve comes in, at least the position that I have here in the compound pool. As you guys see here, I've showed you guys this before. This thing is up used. Jesus. Oh, Bitcoin. I'm gonna have to go back and look at that chart again. Wasn't this like 120 at the beginning of the week or something? So I borrow 50,000 DAI, and I go over to the curve pool and I put it in the compound vault, well, compound pool. I guess vaults are yearn finance, but I get 32% denominated in CRV on a yearly basis. Yay for the win! So it turns out, interestingly enough, the amount, so the gauge is the curve emissions. So that's the 32 and change percent. So it's a fair amount. This is yearly. So 30 third of is that 15, 16,000. It turns out this vesting, by providing liquidity early with Curve, they're providing a huge amount of Curve emissions. So that's another like 14, 15. It's a fair amount of yield that Curve is producing. Um, but this is obviously at the larger scale of a larger size of a position. So I can't, there's no way to know whether this is the right type of investment. And this is why investing is not easy. If you want to make investing easy, you just buy Bitcoin and call it a day. You just buy gold, silver, and Bitcoin. That's it. And you accumulate, accumulate, accumulate. And then you own Pax Gold, PAXG. And you could go on Celsius and you could get interest on your gold. And then you get a paycheck and you buy more gold and you get more interest on your gold. And then hopefully in 20 years, you're getting enough interest on your collateral that it's basically a paycheck and you don't have to work. And that's the path to financial freedom in this country. That's the American dream. All right, I miss folks in the stream. Rick G's in the house. Always a pleasure. Frank, Argo Glass, my man. Hold me, right? Well said. Kel's in the house. Always a pleasure. Yeah, I'm okay. I'm exhausted. I slept like nothing last night. I have a headache. The Stops in the house. Always a pleasure. Eating for you, my friend. Stelios. Yes. Bitcoin. So I had a lot of Tesla at the beginning of the year. I had 330 shares pre-split. Boy, I bought it at 280. I ended up selling it at like 560, and then it went to like 2,500. So that would have been a massive win, like six, seven, $800,000. But I think this crypto was the better choice. I ended up selling for a fair amount of gain in an IRA with Tesla and moved most of it into crypto. So I think that was the better choice. I think crypto, I mentioned this because I think crypto is going to appreciate substantially more than even the most extravagant of equities that have experienced irrational exuberance. Is that not what's playing out? Do we see an end for Bitcoin? Do we see an end for the crypto space disrupting the legacy financial system? No, this is just the beginning. But when you look at the equities, the only reason they're going up is because of financial reasons. From a functional standpoint, from a corporate standpoint, from what they're actually doing standpoint, it feels like they're running on, caffeine at 5 in the morning. They're exhausted. How the hell are they going to push higher? They can't. There's no revenue. There's no growth. There's no expansion. Ay, ay, ay. McMahon, you're so incredibly participating in VA curve with deposit and stake without manually staking CRV. Yeah, you don't stake CRV, you lock it into VECRV, or you take your CRV and you lock it into YVECRV using the curve.ape.tax, which is a Andre and Bantag production, which is basically a Yearn vault, which is a big deal. This page, obviously, if I showed this page to my wife, she'd be like, "What the?" But I know from what Yearn is, I know anecdotally from the internet who Andre is and what Bantag is. He's very transparent. Bantag's all he talks quite a lot. So you get to know and have to some degree of trust in these persons, at least with regard, you trust their intelligence. These productions are incredible. So that's what you're looking at. Crypto Gnome, you claimed 3 CRV from the back scratcher yet? Yes, I did. I got a couple hundred of them bad boys. You're not going to see it. I pinged Banteg on Twitter, and you won't see how much is yours. But obviously, as the Epoch's claim goes up, which is probably on a weekly basis, there's 854 currently, you're going to get emissions. So claim this every 1 week, 2 weeks, give or take, and you'll have your 3 CRV emissions. Bing bada boom. What you do then is you convert that to Bitcoin, you pop that in MakerDAO, you leverage more debt, and that you put into um, a curve pool. You, because you're accumulating the collateral asset that's going to have asymmetric price action. It is experiencing it, and will have even more. Also curious what long-term ROI will look like. So that's the deal. Curve is being diluted. It has huge inflationary daily emissions. So don't buy Curve. Don't buy CRV because it's not sustainable. Every day, 2 million new Curve are introduced, which basically means you need to continuously lock CRV in order to maintain this value, the admin fee admissions. So the only way you could possibly do that is by being a liquidity provider. So you have to take your risk assessment. You have to feel comfortable. You have to have a position that you're able to sleep with at night. And I'm able to. So don't feel, you can't do it if you're going to feel uncomfortable. But you have to have a liquidity position to get the continuous curve emissions to continuously lock it for VECRV. Otherwise, it will be diluted, and your proportional ownership of the curve admin fee will decrease continuously. Diluted. Um, Igor says we have some inside info from Russia YouTube that Steve Mnuchin will surprise us today. I'm expecting a very obvious thing from Treasury. There's going to be a great deal of legislation and regulation, but the most obvious one is going to be if you want to withdraw from a registered financial institution in the United States, they're going to require you to attest ownership of the non-custodial address, basically your address on your ledger device. You're going to have to declare that it is your address because as of current, obviously, without attestation, without an affidavit or a signature or something, it's anecdotal. It's not necessarily yours. It's likely yours. It looks like it's yours, but on paper, there's nothing tying you to it. And from a court of law perspective, from a rigorous documentation, from an attestation perspective, I have never declared to anyone that it's my address. It might not be my address. No one knows. And I think that's the biggest thing. They're gonna, as this thing appreciates through the roof in the coming years, they're gonna want to go after people for taxes. But unless there's a link between an address and a registered financial institution where someone has attested ownership to an address, I think that at best they have that anecdotal relationship, and they don't have that rock solid legal positioning to engage in like IRS action. Anyway, that's just my opinion. Confer with tax advisors for additional commentary. Albeit, bear in mind, I doubt many tax advisors have any thoughts on that. I put my ideas out on Twitter. It's probably I don't think anyone's put these ideas out before, but these are my observations, and they make logical and rational sense. It's kind of like cause and effect. If they're doing this, you have to think, why are they doing this? They're doing that because they have to do that. They have to do that in order to do something else. Causality, cause and effect. Mickman says, Urine, why would anyone choose the die earn over the die vault? Vault APY is much bigger. Die earn over die vault. You talking about urine? So I like the urine products. I think urine is going to swallow. It's like a black hole for the entire DeFi automation space. They're good. Those YFI tokens, man. I wish I could get one of them. I think urine is going to be it's a unicorn. Urine, Curve, Uniswap, Aave, Compound, Maker. I mean, there's just projects out there that stand out as a 1 inch. I think they're going to be a serious component of infrastructure. They just stand out. Whether they stand out in metrics and data and or just the sense that we get of what's going on behind the scenes at the development and business evolution, it's just they really stand out. So Urine really stands out. It's not showing how much though. Yeah, you're talking about the ape tax. Yeah, it doesn't show how much. I pinged Banteg on Twitter. He said there's no way to easily see that number, but once every 1 or 2 weeks, you'll be able to claim your rewards. Perhaps we'll yeah, I reached out. That's what you're saying. Perhaps I will reach out and see if they can fix it. I already pinged Banteg on Twitter. He said there's no easy way to see that data. Noah providing any liquidity to Bancor pools? Of course. For me, the Bancor pool I provide is BNT DAI. I provide BNT because it has the largest BNT yield, 327%. And it's obviously one-sided production. I'm not going for yield than anything else, and it's a relatively small position. So as everyone knows, I'm risk off almost always, and that's a Bitcoin accumulation. But when you're risk on, you're taking small bets. Small bets. 0.1%, 0.5%, 1% of the portfolio, because that's all you need. If 0.1% turns into 1% and it's a 10x, wow. If 1% turns into 10% of your portfolio, wow. These are the types of things that accumulate so much Bitcoin that it changes everything. And especially during, alt season. Bitcoin is ripping. Alts are going to rip. It is inevitable. That's the way the system works. This chart is absolutely incredible. Who pumped Bitcoin? Jay Powell and Minucci Bucci, and whatever politicians facilitated the actions of the Fed and the Treasury. Um, they needed to get out of a liquidity event. And what is a liquidity event? There was no, it was imbalance between sell side and buy side pressure, and the event was really in the Treasury market, and the repo market started in September of 2019. So this financial instability was not caused by the pandemic. It started in 2019, where banks were not lending. Banks stopped lending, and what happened was because the banks stopped lending, in order to get someone to lend to you, the banks were asking for 10%. Meanwhile, it's like usually like 1 or 2% or something like that. So the Fed stepped in and did the repo operations, which were basically they were lending. They were lending for the market rate, which is what the Fed funds or 2%, whatever it was at the time, September of 2019. So they stabilized the market. They resolved that liquidity event. There was no available. There was nothing available to borrow, so there was no lenders, and that was the problem there. And this all just imploded when the shutdowns emerged. It kind of pushed it over the edge, and treasuries became it was another liquidity event, and nobody was buying or selling. I don't know the details like Lynn Alden. I don't know the details like these boys and girls, these smartest people in the room. But this is what happened, and that's what's happening right here. This is a liquidity event. That's exactly what's occurring to Bitcoin. There's no sellers, and if there's no sellers, the price goes up. And if there's really no sellers, the price goes up a lot. And that's what's going on. It's crazy. Um, Nickman, would you open to do a video AMA with your follower? I do an AMA every day, baby. This is an AMA. Ask me anything. That's the whole point of the stream. This whole point of the stream is for me to ramble what's on my mind. I hope it's useful for other folks. It's helpful for me because it helps me organize and clarify my thoughts, and that allows me to make the best decisions possible. And if I'm making the best decisions possible, it has the potential to help other people make the best decisions possible. I'm not just sharing ideas of what I do. I'm sharing ways of thinking and methodology and observations with people so other people can make their own good decisions as well. But this is always an AMA. Ask me anything. That's the way it needs to be. Interesting says, okay, my man. Video AMA with us on video too. Oh, I don't know how to do that. I could look into it. I don't know how to do like a group video type thing. But anyone that's ever on my stream, right now there's a lot. It's actually nice to see 27 people on the stream. Anyone is always welcome to ask me anything. And that's really the point of the stream, because your ideas, your questions help me come up with ideas, and my responses not only help me, they help you. That's the way a community works together to grow and evolve. Sounds like Bitcoin will never see a 20 again. I think there's always a potential for a massive retest. There's no reason 20K cannot be retested. This is a massive fall if that happens. If you go out to the 4 hour, okay. You could easily retest. I mean, look, mean regressions. Look, here's the 200 EMA in the 4 hour. It's at 18 and change. We could have a 20K. Where is that? 19.7, a mean regression on the 1 hour. I mean, these are relatively short-term time frames to not have a mean regression on. Look, 20,300 for a mean regression on the 30 min. You know how bullish that would be? Do you know how bullish that would be if this did this? Bounced off the 30 min? Oh my God, that'd be so bullish, boys and girls, because that is a support. Now the 30 min 200 EMA acted as support. Now bear in mind that's a very short-term time frame for a 200 EMA to be so far deviated. It was $3,600 away from a 200 EMA on a 30 min chart. Oh my goodness, this thing is inflating very fast. This is what's the word? Slipping my mind. This market is I forget the word, but it's so far deviated from the 200 EMA. This is abnormal. The price appreciation is supposed to follow averages. And anytime you're deviated, you're at a point where the whole concept of mean regression comes to mind as a pressure, because that's where things want to head. Things want to head to the average. That's just the natural tendency of natural phenomena. Monthly Zoom call. Oh, Zoom. Zoom will do it. That sounds cool. Yeah, I could figure something out like that. And I know how to put Zoom. Yeah, I could do that. I wonder how many people are limited on Zoom, and I wonder how many people would be interested in being on Zoom. I guess Bashinsky does these types of things. He loves those types of group calls to build community. That sounds like fun. I love Ask Me Anything. That's the whole point, as I said, of the stream. If anyone has any questions at any time, ask me anything. Let's zoom out to the weekly for a second. So this is on the monthly is what Plan B talks about, because it's just getting to an RSI of 80. Because once this thing gets over 80, that's what he talks about. This thing could jump 50 grand, 100 grand. It just in a matter of days or weeks. I mean, look at how short the time frame, the history of the entire asset is. Like you could, this is the basically the entire modern history. 2016 is really when the price 464. Uh, Before it, it was you can't even see it on the chart. It's such a short history for the asset that you can see so much data in such in this time frame on the graph. It's absolutely impressive and humbling to see because look at the price action. This was a massive wick on the monthly, and then you see these wicks that they're solid. Oh, there's everything is different this time, substantially different. Incredible to see. Let's see what we got on the daily. Obviously, all my drawings are completely irrelevant on these higher time frames, but that's a bit. Well, you see the trends and you see the resistances, and then you can see the breakout. So check this out. So there's clearly a trend, and then you see the breakout. So there's such immense deviation from the 200 EMAs. You would argue that it's not sustainable from a technical perspective, but from a fundamental perspective, they're debasing the currency so aggressively. Where does all that money go? That money is going into equities, but now that's scaring the crap out of people because those are so far deviated from the 200 EMAs. That doesn't make any sense. From a historical equities perspective, mean regressions, the asset prices are not supposed to be doing what they're doing. P&Es of 1,000? That's crazy. The asset prices are supposed to be based on earnings and the revenue of a company and how well the performance of a company. Right now, there's a complete decoupling of the asset price from the actual company. It's just ridiculous. Um, Rational exuberance then mean regression. So yeah. So Rick, the thought is, how far does the rational exuberance take you, and what kind of a mean regression? If you go to 400,000, I don't think we're going back to 10 grand. Even though look on the monthly, let's see where the 200 EMA. You don't even have a 200 EMA on the monthly. That's how relatively new it is. But look, you have a 200 EMA on the weekly at 7,000 and change. So the monthly is probably like 5,000. So in a year's time, I don't know. So in a year's time, maybe a 200 EMA on the monthly, and the EMA's at 10,000. I guess it depends how far the blow off top is that it pulls the EMA up that high. That'd be crazy. Yeah, the Bitfinex charts. Good point, Crypto Gnome. Good point. Um, I miss Peter. Peter says, debate who controls Bitcoin, nodes or miners, and node transactions if there are no miners. Yeah, that's a brain buster because miners there's economics and business involved, and they can't just shut down because that's their business and livelihood. But they do have power, and the question is, what this really gets into geopolitical things and countries having power. And there's a whole lot of infrastructure being built out in the United States. Chico Crypto covered a lot of that towards the middle, maybe the beginning of this year. There's definitely a lot of mining build out going on in the U.S. I don't. They're not going to. Bitcoin is going to be what it is beyond the foreseeable future. It's just that's what it's going to be. It's a proof of work. It's mining, and it's going to be extremely competitive, and it's probably going to end up being mined by governments at some point. It's just so powerful. Interesting says Bitcoin has lately grown to be a massive support. It's becoming less cyber and more your friend financially and promotes freedom. Well, now you're getting Sailor on us. I mean, it is representative of freedom in many regards. The amount it's going to appreciate is going to be inspiring, awe-inspiring. Grizzly Bear says, "What are your thoughts on synthetics? Synthetics could potentially disrupt the New York Stock Exchange and Nasdaq. It's a derivatives market. In the next 5 to 10 years, it could become the desired platform to use. Um, it's an absolute disruption. It's one of those assets that stands out. I'm telling you, there's only like it's not there's thousands and thousands of assets, but there's only like a handful, a dozen, maybe 2 dozen assets that are like, yeah, this is entrenched. This is infrastructure. This is going to be around, and synthetics is definitely one of them. Do you know the APY of urine for the curve LPs is like 13? Well, bear in mind those APYs on the Yearn vaults, they're liquidating curve to increase the your value in the vault. So if you have USDC DAI tether pool, whatever it is, or three pool, your growth in the vault is denominated in three CRV. Um, so I actually prefer not using the urn vaults. I want my curve. I want my curve. I'm going to do with my curve what I want with it, and I want the admin fee. My goal with curve is the admin fee. My goal with curve is not the 3, 4, 5, 10, 20% yield that you could possibly get. That's not my goal with curve. Um, I want to own as much of that admin fee. I'm doing a speculative play with curve. And I think the admin fee for Curve could potentially be worth a huge amount of revenue, continue a revenue stream in the future. That's my speculative play. Do your own due diligence and don't watch your position sizing, boys and girls. Don't over position. Do you know the AP, or if you can choose curve and have the 20%. Yeah, Angelo, there's a whole lot to process with regard to Yearn and curve, and the yield that the various vaults and pools provide, and the denomination of the yield that's provided, and what to do with it, and the boost for curve, and the admin fee. There's a whole lot of thought that needs to go in to considering positions on these platforms. Yearn, the bear in mind, guys, Yearn, the whole goal for it is DeFi automation. It's the compound pool on Yearn is designed to do what I'm doing with the the admin fee and the back scratcher. So the compound pool on Curve on Yearn, if you go here, uses the ape tax. So I'll show you right here. So if you go to the vault, and this compound pool at the top uses this ape tax. This is an Andre and Bantech production, which are the developers of Yearn, amongst others probably at this point. This is going to be a heck of a business and enterprise. So that's it. So these are just choices, and it's not easy to make these choices, boys and girls. So the most important thing that you could do is ask questions, and it's not just me. You have to ask questions to yourself. You have to ask questions to friends and family and financial advisors, and it's even then it might not be the easiest choice to make choices. I talk about this because it's taken a lot for me to make these types of choices of what to do, why to do, how to do it, how much am I going to apply, how much risk am I taking, and believe me, I've given all of this extensive thought, and sometimes I don't make the best position sizing. Here, look, yesterday I think I spent like $400 in Ethereum transaction fees, taking my assets out of Curve, and at the end of the night, I ended up putting them back in. Don't overtrade. Since Bitcoin has ripped through 20K, I have the exact same positions. The appropriate thing for me to do is nothing, and is to sit on my hands and prevent myself from making changes. That's the truth. So there's no perfect course of action. There's no better thing to do. All there is choices that are hard to make, that either produce a better result or a worse result. And you won't know if it's a better result or a worse result until a bit of time passes. Anyway, what am I missing? It's 12:06, but interesting says, can quantum computers do proof of work? Yeah, so we'll get into that in the next 5, 10 years. Matthew from the DigiBuy community talks about it better than I ever can, about the potential for quantum computing, and obviously Jared Tate knows a fair amount as well. Talk about it to a great extent. Um, I'm not too worried about it. And when such complexity arises, look at what's being built in the Ethereum space with these DeFi protocols. Um, there is no hurdle that cannot be surmounted. There's no technological limitation. That's the bottom line. I think it's pulling back now. Yeah, let's take a look real quick and then we'll drop the stream. My friend, that's not pulling out 23,600. Oh my goodness. You have to look at it on the 5 minute time frame to get any granularity on the price action. This is not pulling back. Oh, boy. All right, everybody. Enjoy Bitcoin. Enjoy these asymmetric returns. Be careful. Don't gamble. Small bets that 1% to 10% changes everything. And maybe even 1% is too much. Accumulate your collateral assets, lend them on Celsius and BlockFi, lend them on MakerDAO. I get 4% here. And then if I go over to Curve, and this pays, the APY on the position pays for it, but I also get 32%. That's called a carry trade. I posted earlier on Twitter about the carry trade. And that's how I'm using my collateral to produce additional revenue. And this is the way it works. Don't sell Bitcoin. Bitcoin is going to be the most sought after asset on this planet. Gold, silver, Bitcoin. Gold, silver, Bitcoin. Even don't go all in Bitcoin. Uh, uh, I recommend gold and silver as well, and financial advisors recommend gold and silver as well. They're wonderful assets. They're going to produce asymmetric returns and commodities as well eventually. Unless Brent Johnson and Dollar Bull kicks in, and then everyone's in trouble. So that's a whole nother story, way beyond my skill set. Thank you everyone for joining me. 12:08 p.m. on a Thursday, December 17th. Smack those thumbs up buttons. Tell everyone to subscribe. And tomorrow is another day. I will see you all tomorrow. Peace.